Jim Duquette. What I missed last week, sir?
Oh man, we had Patty on and we took a deep dive into what the real estate market was doing and what she saw with her clients and had a really good discussion, Brett.
Yeah. Any big ahas we should remind everybody?
The biggest one out there that Patty said, and it rang true, and we talked about it afterwards, was keep showing up. It's not necessarily an aha, but in a market like this, you can really feel like you don't have a lot of traction going, and it makes you want to kind of just stay put then. And no, you just got to keep showing up every day and keep doing the things that that work, and know that if it's not coming to fruition now, the work that you're doing now isn't going to waste.
Yeah,
that it will come to fruition later.
One of the things that I love when we start going through numbers like this, right, is this is a reminder to everybody that activity is always going on. And whether you feel like nothing's happening or you're struggling or maybe you're winning, and but this is real data of people making real estate moves, whether they're listing houses or coming soon or going under contract or pending or expired. This is real movement going on in the market in real time. And that's why we do this, right? And just looking at this, like 13 people in Rockwall County went under active option last 7 days. And I hope a chunk of those were ours, right?
Absolutely. You're on Henderson County.
Oh, I'm on Henderson County. Sorry. Rockwall County, even better, had 19. Nope. 21 went under contract, active option the last 7 days, right? So same story. I hope a chunk of those are ours. But here's what's interesting. Go back 4 weeks, Jim. 13, September 1. 19, September 8. 16, September 15th. All the way up to 21 on September 22nd. Is that a result of interest rates? Maybe. Is that a result of, people doing price reductions? Maybe. It's probably a combination of a lot of things, right? But
it's all working together.
It all works together, and that's an upward trend, which is not that normal in September, to be honest.
Yeah, no, and we talked about, the last maybe 2 years, Brett, that, maybe we'll see this upward trajectory going into the third and fourth quarter. And I think the situation is kind of in a good position right now where we could see that happen. And you're seeing it with the 19, 16, and 21. Mortgage apps have been really funny, where refinances, of course, been way up since we've fallen from nearly 7% down to where we were at 6.12 at the low. But Brett, you take a look at, while we were falling from 7%, right? That was the lowest mortgage apps, like week over week. Even though mortgage rates were going down, mortgage apps were going down too, right? The increase was decreasing. So we had less people filling out mortgage applications. And I think it was because the mentality of they wanted to see how low it could go.
Yeah.
Right. It's like watching that stock plummet. And then you're sitting there going, oh, not yet, not yet, not yet. And then you see that bounce back, which is what we saw whenever the Fed cut the rate. And we all of a sudden popped back up to 6.4, 6.35. And then we saw mortgage apps go up this last week once that happened.
Yeah. It's interesting. And that's why we do this, right? Just to give you guys the global view of activity. But 61 new active properties. Now, 4 weeks ago, we changed the way we were searching. So that's why these numbers are drastically different. Yet this is a more accurate number, according to Luke, who's on here. He's the one that tracks all our stats for us. The 61 new active properties coming on the market. There's none in coming soon in the last 7 days. One is contingent, and then 21 active option. 24 pending, which I liked it when it was in the 50s, Jim.
Right.
24 I'll take at the moment, right, for September. But I'm encouraged by 33 closed out in the last 7 days. We weren't that much higher in August. We were at 38, 44, 40, and then the end of the month closings obviously spike. But we're 2/3 of what the summer months were in the first month of fall.
We're rising.
Yeah, and we're rising, right? Like,
Yeah.
I wouldn't be shocked if we had a week where 40 closed. Maybe the end of the month we're hitting 50, 60 again. We'll see, right?
Yeah.
And that's Rockwall County. If I jump over to Dallas, 570, so a little bit of a dip of what they were putting on the market in the last couple of weeks. But 269 went under contract. So it started out 128, 255, 282, 269. So it's kind of bouncing around a little bit in Dallas County. But 95 pending, which is an increase. It's climbing. And the closing, same story, 209, 228, 264. It's climbing, which normally we're declining at this time of year. But I think the lower declining interest rate environment's causing the sales to go up, which I hope everybody's experiencing that. Collin County, we little bit of a dip in new active inventory, down from 472 to 413, but same story. Look at this active option going from 69 to 142 to 159 to 175. That's really encouraging in the real estate industry right now. And then pendings, 136, 113, 126, and then the closings, 166, 192, 236 in Collin County. It's increasing. And I feel really encouraged by that going into the end of this year. What about you?
Yeah, same thing. I pulled up just the last couple of years in the MLS, looking around. And Brett, this year, we are doing exactly what we did in 24 and 23. I'm sorry. So those markets aren't any different, but in seeing these September numbers going up, because you're right, we had this pretty big dip the last 2 years. This is where I see we could have that rise up and be unlike the last couple of years. And so, to what Patty was saying last week when we started out this call, you got to be ready and you got to keep your feet moving. Yep. Show up every day.
All right. Henderson, as I started here, and I should have, but 28 new active inventory, 13 went under contract, which not a big increase, but it's certainly an increase this week. And then pendings are pretty solid. And then closing 6, 10, 9. They definitely experienced more of a slowdown after the summer months because such a big part of that market is lakefront property, right? But anyway, any thoughts real quick before we move on from the numbers?
No, Henderson, I think it's really encouraging, those active option numbers, Brett. I mean,
yeah,
you hit that 8, 7 and then pop back up 12, 11, 13.
Yep.
Healthy.
All right. 2 giant stories hit the newsreel this week. First one is Zillow's getting sued on a class action lawsuit. And I haven't dug too deep into this to see what kind of teeth the lawsuit actually has.
It's weird.
But it's interesting because it's a referral fee, right? And if there's any teeth attached to this, but the question that I'm asking myself is, when these kind of things happen, and notice it's the same law firm that did the NAR settlement. And my understanding is the lawyers make a lot of money in these things, and it disrupts the industry a little bit, but nobody really gets paid that much money in these class action lawsuits. I don't know if you ever got the check on the Facebook class action lawsuit. I haven't got mine yet, but I'm expecting a few dollars. But my biggest question, Jim, is a chunk of our industry is done through lead aggregation.
Yeah.
And I'm wondering if this has any effect on lead aggregation in the future, because Zillow's the biggest player in lead aggregation. Then you've got the realtor.coms and the homes.coms and all those big companies that part of their revenue model is based off lead aggregation. Do you think it changes it?
Yeah, that was the same question that I was running into, because there's a lot of different things about the teeth that this lawsuit has. And I think there's a fallacy to it, but we don't need to get into that. But I think where we start hitting where this might have some teeth is transparency, right? Transparency and disclosure. And there's, we talk to people about, on the social disclosure, like you can't over disclose. Like, if you know something about a property, say something about it. And where I can see this really changing is, all right, there needs to be a clear way that the consumer knows who they're actually communicating with, right? So do we start seeing contact the listing agent directly? I know they've got it on there, but I think there's a way that they changed their model, which then made me start thinking, all right, well, if you are going off of a lead model that you're using a realtor.com or a Zillow, you're always at the whim of what happens to them in their industry or what they decide to do tomorrow. And so your business can change drastically and you have no control over it. And that's where I see the big risk here is if you're diving heavy into a realtor.com and a Zillow, you have no control over what happens to your leads tomorrow. And this could really disrupt it in a lot of different ways, Brett. And so this is where I think we can get better at. We've been talking a lot about skills-based, be a skills-based realtor. So how do we take our leads and be in control of them so we're not at the whim of what happens with Zillow?
Yeah, for sure. You want control over your future, right?
Right. So I think that's the big question to really ask is, how do we turn this around and just be in more control of how do I generate my own leads that I know if I do X, Y, and Z, that I can get the same type of results.
Absolutely. So the other big story actually hit the newsreels this morning. And it says brokerage giant Compass agrees to acquire rival Anywhere for $1.6 billion. So Anywhere is the corporate brand for Coldwell Banker, Century 21, Sotheby's, Better Homes and Gardens. And I haven't dug too deep because literally it hit the newsreel this morning. But my first blink is this becomes the corporate America of real estate. And what I mean by that is I think Coldwell Banker, Century 21, solid brands and solid competitors, but they were kind of dying without venture capital to take them kind of into the future, right? Yeah. And but Compass, even though their design of their company was traditional in a sense, kind of in a way now all of a sudden is corporate by buying this Anywhere, which just means you answer to stockholders and profit margins and stuff like that, which I don't know what this means for our industry. I do think about things like Compass was the voice of the private listing network argument in the real estate space. And if they acquire all these brands, that gives them a much louder voice in the private listing network space. Yeah. Compass also was the voice anti-Zillow. And he was taking on Zillow very publicly, which certainly gives him a louder voice in that conversation. Yet I don't I mean, I understand why they did it, but I think it actually hurts it long term more than it helps it, in my opinion. Just because now all of a sudden it's not the entrepreneurial space or uh, the renegade space of that real estate tends to be. It's very corporate now, but we'll see. Everything evolves, and obviously there's a reason they were doing this, unless Coldwell Banker and Century 21 were throwing in the towel. I don't know. We'll see. More to come, right? But it hit the news this morning, so I was like, we can't not mention it, right?
No, absolutely. I'm glad you did. That's crazy. I hadn't seen that yet, Brett. And
Yeah.
it is interesting going back over to that Zillow story and how those two tie together. And you said it gives them a louder voice now. And one of the things I was mentioning in the suit was the idea that Zillow won't allow you to be listed on there if you're in that private listing after so many warnings.
Correct.
Really interesting.
Very interesting. All right, moving on. So I want to put this article up here. And before I do, the interest rates as of Friday, 4 p.m. Eastern, were 6.35, which, if you're paying attention, are higher than they were a week ago. Yet the Federal Reserve last week cut the federal rate, the Fed rate. And the reason I put this up here is I think agents, some probably try to understand it, but most don't understand how to explain it to the consumer. And we've talked about it before, Jim. And I think in today's day and age around AI, you could literally just type in to ChatGPT, how does the Federal Reserve affect mortgage rates, and probably get a pretty good explanation to be able to explain to your consumers these days. But the reality is this: the Federal Reserve controls the interest rates at which banks can borrow money. The banks control the interest rates at which the consumers borrow money. Now they're connected because the banks lend the money and the banks have a cost on borrowing the money and all that stuff, but they're not directly related. So it's kind of odd to the consumer to hear, oh, the federal fund rate went down last week. Oh, mortgage rates went up. How do you explain that? And they're not completely related. And the other part of this, Jim, is the news media is saying you should expect 2 more Fed rate cuts before the end of the year, which I think the uneducated consumer thinks, oh, maybe I should wait until the Fed cuts rates because I'll get a cheaper mortgage rate in buying my house. It could be true, but it's not probable. And they're not totally related. And one of the reasons I try to explain this is if you have or know anybody from Venezuela, Venezuela is a really good example of the country had inflation that got so out of control that their currency basically was worth nothing. And it ruined the currency of Venezuela. And while we have a love-hate relationship with the Federal Reserve, and there's certainly opinions both sides, the good part of the banking system or the Federal Reserve System of the U.S. is it protects the value of the U.S. dollar, which also protects the value of the home we all live in. And while inflation got out of control a year or two ago, the Federal Reserve protected the value of the U.S. dollar by raising the federal funds rate to bring inflation down. And but consequently, mortgage rates also went up, which wasn't a good thing for us, but they've been coming down. And what I would say, and it's my opinion, interest rates anywhere between 6 and 6.5 are probably the normal interest rate that is probably what banks should be lending money at, period. because they've got to get a return on their investment. They've got to get some kind of value in loaning us hundreds of thousands of dollars to buy a house. And history has always said somewhere around 6 to 6.5 is a pretty market stable interest rate. And we're there right now. So we're actually pretty normal in terms of an interest rate environment. I don't know. What do you say?
Yeah. I think that was pretty good, Brett. And the only thing I'd add to it is the Fed is there to watch job growth and inflation. And so those are the two dances you have right now. And that's why you see whenever we have the job report come out, you start seeing rates come down. But when the Fed cuts the rate, they go up because we still have an inflation problem, right? And so investors are looking at the bond market and everything else, and they're weighing their risk.
Yep.
And that's why you see that dance between they go down and they come up during those two time periods.
There you go. All right, let me hit a couple other things real quick.
Yeah.
AI. So AI has taken real estate by storm. You probably heard me say years and years ago, I was team leader in Dallas, and Facebook came out, and half the audience would cross their arms and sit back and say Facebook's for the kids. You fast forward, you couldn't imagine real estate without social media today. AI is going to be the same effect, right? Like half the people are not leaned into it at this point. Yet you're going to wake up in the future and not be able to imagine real estate without the integration of artificial intelligence. I'm 100% convinced of that. Here's what's weird, Jim. Revealed that only 58% of surveyed realtors have used ChatGPT. That's telling me 42% of the real estate population has never even tried it.
Well, and I think those last numbers, that 20% and 22%, I mean, when you're looking at who's really using it, it's that daily and weekly. Everybody else is just dabbling in it and maybe using it as like a Google search engine.
Yeah. So I'm thinking about this, like, Jim, you go on a listing presentation today. Should you be talking to your seller about how you're going to leverage AI to sell their house? Should that be a part of your listing presentation in the future? I say so, because I can tell you 42% of the agents aren't at the listing table because they've never even logged in. And my guess is 80% of the agents wouldn't mention it at the listing table because they're not in it daily. And my guess is the difference between this 20% and the 58% is somebody's probably tried to get their listing description for MLS written by ChatGPT. And that's the extent of what they're probably using it for. Yeah. And I don't want to make anybody feel bad that if they're not using it. I'm just putting this out there that this is a constant that's going to grow at a fast pace in our industry, and you need to be leaned into it.
Yeah, well said. It's not going anywhere.
You know, Ashley has me booked to teach a class there next Monday, and we're going to do a whole, let me see if I can find the picture real quick. We're going to do a whole, can you see that? AI growth planning clinic. It's not your business planning clinic. We're going to use AI to plan your business. And it's going to be a workshop. And it's next Monday from 11 to 2. So I'm really excited about this. I'm building a lot of stuff inside of AI to make it a workshop for everybody of how to build their business plan through AI. And it's going to be exciting. So, but it's just to say that AI is a big part of our future, right?
Yeah. Yeah. The quicker we learn how to adapt to it and stop using it as just a search engine, I do that all the time. But I think if you can get in there and create your own GPT within ChatGPT, right? And that's how you can really start making it. And I'm sure there's a lot of people going, I have zero idea. But that's what you can ask it. How can I do this within real estate?
Yeah.
And start educating yourself on this. Like, you don't have to be alone on it.
Exactly. All right. Loans. So there's this thing called non-QM or non-qualifying mortgages. And they got a bad reputation back in 2008, 9, and 10. However, what a non-qualifying mortgage is basically Fannie Mae, Freddie Mac, the big mortgage underwriters. They like to know, oh, I've got a W-2, a credit score, and money, and it's an A paper loan, and you can check boxes and get your loan approved. However, there's a chunk of consumers that don't fall in that category, including real estate agents who are independent contractors and 1099 employees and all those people that don't come to the table with a W-2 paycheck, that have income that varies and things like that. So the reason I'm putting this out here is I believe that we're going to see more and more of this in the future. I think lenders, when they're talking to you or speaking at a team meeting, are going to start talking more and more about products that are non-qualifying, which doesn't mean it's a bad product, but it also means you probably have to educate yourself. Are you seeing more of this at this point, Jim?
Starting to see a little bit more. I was glad that you sent this out, and I absolutely think that this is timely and that we should be asking our lender partners about how this exactly works for our database, because we have a lot of clients that fall into this also.
Yeah. I'm going to show a website, and I want to be very clear. I'm not advocating for this, but it's just an out of the box thing that somebody sent me over the weekend that I think is wild and crazy. And yet, is it that wild? So they sent me this website, Jubilee. And I sent it to you this morning, Jim. It says, same house, better price, increase your buying power, and keep more capital in your pocket when you use Jubilee to buy a home, save 95% on your down payment. Well, then you start reading into the fine details. When you buy a house, you own the home and you lease the land from Jubilee. So they have a ground lease on the property and you own the structure. By the way, this is actually how commercial real estate's been done forever.
Yeah.
I think you all know North Park Mall. The mall owns the building, but somebody else owns the land underneath it.
This was the McDonald's model.
Yeah, it's the McDonald's model.
Yeah.
Is this something that's going to make its way into real estate? Maybe. I think mobile homes were done this way forever, right?
Yeah.
But it's just an example that once the real estate market gets tightened and on its way out of that tightening, lots of unconventional stuff starts to show up in our world. And some are probably okay, but there's probably some bad players too. You just have to pay attention, right?
Yeah, and do your homework. When you sent that, Brett, I probably spent a good part of my morning just walking through scenarios with ChatGPT and what the heck does this actually mean? And going, all right, what do I save here? What are my payments? Years 1 through 5, 6 through 10. What happens when I sell? How much do I make? How much do I lose? Yeah, we really dove into it, but I think there's going to be more products out there. You know, we talked a little bit of, you sent one about insurance, and it made me think of Lemonade, and Lemonade uses AI on the back end to cut down overhead costs.
Yeah.
And I think we're just going to see more things to help cut down cost on the home ownership. And we don't need to necessarily run away from it. We need to understand it.
Yep. All right. Last thing I wanted to hit. There's a insurance group plans, speaking of insurance, plans new neighborhood in Garland. And it's a new 42-acre neighborhood headed to the suburb northeast of Dallas. Dallas-based Liberty Bankers Insurance Group plans to develop a 149-home community at Bunker Hill Road on the far north side of Garland near Saxe High School. community known as Parkside, 40 to 45 foot lots. And it looks like a whole new subdivision. You can zoom in on where this is, but it looks like it's right off of George Bush on the northeast corner of George Bush and 78. And probably some affordable real estate, something to be aware of and pay attention to, right?
Absolutely. It's right in our backyard, just up, like I said, George Bush or out at Firewheel.
Yeah. And, land is a scarce resource. And yes, we could go to Royce City, we could go to Forney, we can go to Terrell, and there's lots of subdivisions going up, but not everybody wants to live that far out, right? So having options of affordable new construction inside the cities is probably a good thing to know about.
Yeah. It's all just about education. And, I think it said 2027 is whenever they're going to be going up. So it's right around the corner.
Yeah. They'll start pre-saling next summer.
Yeah.
So be aware. Anything else? Last thoughts?
No, Brett, this was a great one. Glad to have you back in town.
Yeah. Somebody texted me this morning and said, "Are you struggling this morning?" I said, "No, I've been wide awake since 4 a.m. I'll struggle at 5 o'clock tonight."
No doubt.
All right. Have a good one.
You too, Brett. Bye.
Bye.